Last Tuesday there was a gap down. We talked about this gap, and this is by far the largest downward downward progress that we have ever seen since quite a while, at least from this segment here. So right after this choppy movement, so we have quite a lot of the choppy segment here with spike of the supply, increasing of the volatility. But after that, this is very bullish. So this is a way of the contraction of the volatility. Whether you look at it from the candle spread or look at it from the volume. So overall, decreasing of the volume, decreasing of the supply, contraction of the volatility, tightening of the price action, small candles. But suddenly there is a geopolitical tension between the Europe and the US, tariff, and also this is minus 2%, more than 2%, 2.1%, but it sort of gets absorbed the next day. So look at this volume. So we got a spike of the volume with increasing of the bearish candle, but next day just complete reverse. Okay, although it didn't really just close above the bearish candle, but at least this is another reversal sign with a lot of the volume. So if you look at it from the spring point of view, we also talk about this swing low support. So as long as it breaks below and commit below, then it's likely going to go down and test the next level of the support. But this looks like a spring. So it's just a 1 day commitment or just a temporary commitment, and followed by a reversal bar, commit above, back into this, back above the swing low level, and followed by a few bullish day. And even yesterday, it looks quite strong as well, although it could be a relatively big candle, so choppy, but I do not see spike of the supply, spike of the volume. In fact, this is just filling up the gap. So we did get a big gap right here. So that sort of just filled up yesterday. So there's a gap filling activity, and followed by today, still yet to open the markets, but we already have a relatively bullish candle. So it's heading back to the previous all-time high level. So now it's about 7,000. So looking relatively bullish. And in terms of this accumulation bias trading range, right now we still have contraction of the volatility from 1, 2, 3 to 4, and suddenly this segment 5 sort of violate that. So there's a localized increase of the volatility from 4 to 5, but it's not that bad yet. Okay, so the conservative movement for the S&P 500 will be to have another test of the reaction. Okay, so since we have this sort of the slight increase of the volatility, and now it's heading back to the resistance level, we could see maybe a test of the or attempt to break above the high, and followed by a shallow pullback. So ideally, I would like to see something like this. So shallow pullback, a few bar consolidation before a breakout, maybe 2 days consolidation, 2-day test bar, and before the breakout. I think that would be the ideal bull case. Otherwise, we still could get maybe another test of the gap area. So right now, we could see maybe another pullback, testing, and then forming a right handle before the breakout. So as long as we have the support level, so here is the sort of the support level, swing low support level, 6,800 is a much more meaningful support level, is holding up well. So as long as this zone is not violated, S&P 500 is likely going to go up and keep breaking new high. So Nikki say the January 2026 volume relatively lower than November 2025. That's price range. Well, if you compare to November, that's really just a sell-off. So we need to take a look at the context. So in this case, context is very important. So in terms of the context, here is the change of character bar. So starting from October, and we did get this kind of the change of character bar, suggests that this previous uptrend is likely coming to an end, at least going into a consolidation mode. So this is how we can use the change of character bar as a gauge. Right after this change of character bar, we have another round of the sell-off. So came with increasing of the volume. So that is sell-off or pullback. So the context is just that the market is having a big reaction, and right after that, it's sort of just back to normal, and the volatility just becomes or reset itself. So right after this sell-off, here is the bullish segment where we have the contraction of the volatility. So this generates volume. In short, that's just lack of the supply. So supply doesn't really showed up right at the top here. So if the bear want to attack, so it's likely going to attack right at the top, right at the breakout level. So whenever there is a attempt to break out or break above, there should be some profit taking, selling into strength, but it doesn't happen. It didn't happen. In fact, the only bar that we have, or the only two bar that we have, is these two combo bars. So this is caused by the geopolitical tension. And next bar, it just shows that demand come in and bought the dip. So we have a gap down, and next day it just get bought right up here and continuation to the upside. So that's just means that supply has been absorbed. Since we have supply coming out here, a lot of supply coming out here, and all get absorbed, okay, on the way down and also on the way up. And also this portion right here, there's consistent supply coming out, but with a higher low and also relatively that is just a small pullback, or you can call it a shallow reaction. So this is also the supply absorption, and that is just a spring type action, okay, a shakeout. So a lot of the supply absorption, and this zone right here is perfect for demand to come in. So previously marked as the supply absorption zone, and now is proven as demand came in within the zone as well. So overall, supply has been absorbed, and this is a very healthy sign. So unless we do see another spike of the supply right at the top, and then with bearish bar, it's likely going to be relatively smooth uptrend and just going up from here. Okay, so that's the S&P 500. Short term, at least in terms of the swing, this is your upswing. So reversal point is here, upswing is intact. It's likely going to at least test the swing high level, followed by a very shallow type consolidation and breakout to continue the uptrend. So once this consolidation or the accumulation range structure is ready, and we should see this kickstart the uptrend to start a sign of strength rally.